This morning, USDA said we had some overnight export sales. Now, in a case like this, that could mean over the weekend. And let's review what we had. We had 2 sales this time of corn and 1 sale of soybeans. So we had soybeans, 218,300 tons to unknown destinations, corn, 207,140 tons to unknown destinations, and another sale of corn, 110,800 tons to Japan. How are the markets doing in the early going, though? Well, with that kind of bullish news, let's take a look. December corn down 4.5 cents now at 3.60 3/4 per bushel. March down 3 3/4 cents. Well, let's take a look at these soybean quotes provided by bar chart, and November now down 9.5 cents at 9.93. Who put the grease the skids on that thing? We had November up at 10.07.5 overnight. And now all the way down to 9.93 on the low of the day. We're off of our overnight high here by, 14.5 cents. Let's take a look at what's going on in the wheat trade in the early going here on a Monday. We have the Chicago December wheat down 4.5 cents at 5.39 3/4. So we're about 7 cents off our overnight high there. Kansas City wheat on December now 4.5 cents lower at 4.70 3/4. Here again, nearly 6 cents off our overnight high. In the Minneapolis market, you have December down 4 3/4 cents at 5.25. Again, over 6 cents off its overnight high. And the cotton market is a little bit higher. We have December 35 points higher at 66.30 cents per pound. So let's bring in Chris Swift of Swift Trading Incorporated, based in Nashville. And we'll pick his brain about what's going on here in this market. So bullish news this morning, and it didn't have any impact here. It can't hold up the grain. Does that mean we're now in the depths of harvest activity?
And I think that's what it's all about, Marlin, is the harvest activity. I was up in southern Kentucky yesterday, and they had the combines rolling. They had the grain buggies out just as hard as they could. So I have a sneaky feeling that a lot of this is just front-end sales. And with no carry in the market, it makes sense. You want to try to get that grain off the combine and sold just as quickly as possible without any carry in the bean market and very little carry in the corn market. So I can see where upfront sales are going to be dominating.
Yeah, you look at the March soybeans right now at 9.92.5, and they're almost identical to what the nearby November is at 9.93. So yeah, I mean, if anything, they're giving up a little ground in those deferred contracts. That's a little bit unusual. That definitely means when you see that happen, they want those soybeans right now, right?
That's very true. And we can see that because we were right at the tail end of the last year's crop, and South America has probably pretty much run out of all their products. So we're the last ones on the board, but we know we got harvest coming. Everybody can kind of see how big that's going to be.
So does that mean that the trade is going to be ignoring these overnight export sales reports now for a while?
I don't think that they'll ignore them, but they probably won't have the same impact to them as what they have had in the past. You got to think a couple of things. One, they've done a lot of buying. But they haven't really bought up anything like comparison to last year, so we don't know whether this is just a kind of a gift horse here. We're going to buy a few grains here from you right here on the tail end of it, or whether or not there's a lot more yet still to come. And I'm kind of skeptical about that, still more to come just yet.
I did hear that there's supposed to be a 24-hour strike in Argentina, and of course they're the biggest producer of soybean meal. And October soy meal is actually down $6.30 at $3.30.60 per ton. So I thought that was a little bit unusual there. I thought maybe that would be a little helpful to the U.S. soybean meal market. Apparently not so far today anyway. And soybean oil has October now 28 points lower at 32.56 per hundredweight. Okay, we'll come back in just a moment and we'll talk more with Chris Swift. We'll take a look at our outside markets and our livestock trade when we come back. Did want to take another peek at that dollar value. I saw earlier this morning where it was starting to decline quite a bit, and it was over 400 points lower. It's kind of stabilizing, you could say. December futures down 372 points, now down 382, and it's quoted at 94.300. So it is still taking it on the chin here so far this morning. Just wanted to point that out. Along with the Dow, and on the Dow Jones futures for December, we have the contract now 513 points higher. Look at it go. 27,556 as it stands right now. And I was talking with Chris Swift during the break here, and we were talking about the energy market. We have the West Texas Intermediate crude just kind of chopping around here. It's been above and below that $40 mark. It had been just a little bit lower, and now just updated to 19 cents higher at $40.44 per barrel. Now let's check out our live cattle trade and our feeder cattle market, see what they're doing. We're higher now. October, 37 higher. We're at 107.95 per hundredweight. December now 20 cents higher at 111.60 per hundred. And on these quotes provided by Bar Chart, we have the feeder cattle market showing October now a dime higher at 140.42. Well, that's $1.20 off of our earlier low earlier this morning. November's up 15 cents. On the lean hog trade, now you have the October contract 47 cents higher at 72.22, while the December contract is now down 82 cents at 63.60. So a mixed bag there. Chris, what's going on with this cattle market here? After what was called a bearish cattle on feed report Friday, here we turned it around and now we're trading higher this morning. How'd they do that?
You know, I'm not real sure, Marlin, but I've heard variations between most people already knew that the on-feed report was going to have a heavy placement number, but we go all the way back to the March-April time frame where we placed fewer cattle in that time frame, and even though we've got 4% more cattle on feed, those that are ready to be finished right this instant may be a little bit shorter of the demand that we have out there. We noticed last week that both Kroger's and Publix had big sales for their New York strip, so they had big feature items on there, and maybe they're looking to do another feature here just before the fall gets kicked in good.
Well, when we looked at that live cattle chart here last week, it had that appearance that maybe it was developing a head and shoulders top, but now you get a formation like this, and it looked more like consolidation, and maybe it's basing out for another move, so we'll have to watch that this week. That's a very interesting chart development right there. Chris, as always, thank you for all the help. This morning, as we get rolling here on a Monday, Chris Swift is with Swift Trading Incorporated. He's based right here in Nashville. Janet?
All right, as always,